Republic Technologies is an Ethereum infrastructure company backed by an Ethereum-dominated treasury, and the company operates proprietary validator and attestation networks to safeguard data integrity and security for universal applications. CEO Daniel Liu is here and is going to review the company's operations and opportunities. I'm Martin Gago with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Daniel, how's it going? Thanks for joining us. And what are we going to learn today?
Hey, Martin, it's going well. Thanks for having me. Yeah, I'm really excited to come and share a little bit more about what we're doing. I think happy to really dive right in. So I think starting off on a quick background on myself and the company, I started my career in finance, pivoted over to the digital asset space in 2017, where I helped build some of the core infrastructure for the entire ecosystem, starting from the exchanges to mobile trading software, to being some of the earliest participants in specifically the Ethereum ecosystem. As such, we've come to go and take Republic Technologies down this digital asset route. And we're currently a publicly traded technology company that's integrating Ethereum infrastructure into the global economy. We're backed by an ETH-denominated treasury. And as such, we'll be operating proprietary validators and attestation networks, like you mentioned, Martin, as well as safeguarding the data integrity for all the applications that will be either running through us or through the Ethereum network. And before we dive more into the company, I think it's really important to talk about really what is Ethereum. And Ethereum today is really the world's largest and most decentralized computing infrastructure. It's something that enables smart contracts, tokenized assets, and true trustless financial settlement. And so, it has scaled significantly since inception, almost 10 years ago now. And, over this time, it's grown from something that was less than $1 to currently over $4,000 per token. The entire network secures over $270 billion of transactions. And especially recently, with stablecoins being incredibly popular and a lot of innovation going on there, it's consistently been the #1 and blockchain of choice for stablecoins. So that's really important. And especially this year with stablecoins, that's when Ethereum is really starting to take off. And so with all that said, when we think about Ethereum, we really do think of it as digital fuel. When my banking days, I worked in energy finance, and to just tell you the comparisons and parallels between Ethereum and oil, it's really uncanny how many they are. And so just even down to the simplest powering the transactions that are going over the blockchain, right? Like when we see oil really transforming the industrial age, we see Ethereum taking us into the digital future. As we continuously develop these frameworks, we're starting to see that Ethereum really have its Bitcoin 2017 moment. And what I mean by that is back in 2017, if you remember, that's when BTC was actually beneath $1,000 per coin. And that's when Wall Street really first began to discover this narrative of Bitcoin being digital gold. And since then, we've gone, I believe, over 100x. Currently, we went from below 1,000 to over 100,000. And we see a very similar trend happening with Ethereum. So obviously, we have the Genius Act, and we have the crypto project as well being pushed by the SEC to try and move all of financial transactions on chain. We have guys like BlackRock with their ETFs. We have JP Morgan building their stablecoin on Ethereum. And we have Robinhood, as well as all the other top exchanges, moving to tokenize on Ethereum. And when you look at the reasons why this may happen, it becomes very obvious, right? So Ethereum really is the only smart contract blockchain that's been time tested for the decade. And during this decade, there has been zero downtime, right? So that is probably one of the most important factors. Having that 0% downtime is something that all of these large financial institutions worldwide need. And so being able to go and have that metric is something that they can trust and then can begin not only exploring, but building on top of, as we just mentioned. Secondly, when you think about the entire Ethereum network, it's really the only one that's recognized by the United States. And therefore, we have this regulatory clarity. Ethereum is recognized as a commodity, and therefore we really see a lot of development, and we're very optimistic. We expect this to continue not only through this administration, but onto further administrations as well. This momentum really underscores Ethereum's transition from the second largest smart contract blockchain into something that's more like core financial infrastructure. And we expect this to play out over the next couple of years into the next decade. So as such, the company, Republic, we will be aligned with this mission and be there every step along the way. So now diving really into what we do. At the core of our business, we have called these two verticals, and starting with our infrastructure services. This really goes along with our thesis of Ethereum being digital infrastructure. We want to be involved. We want to be there to support not only our own infrastructure, but anyone else who wishes to come onto the network and build. And as such, we'll be partnering with the existing incumbents, folks who are very established and working with the various ETFs and ETPs to run our own validators, as well as tamper-proof attestations. And all of these will be generating an on-chain yield. We'll dive a little bit more into that in a second. And the second half of the Treasury is really our Treasury strategy. And so that's kind of like, once we have this Ethereum, right, how do we really scale? How do we go and accumulate more and make sure that as we accumulate, all of the fundraisers are accretive to all shareholders? Everything is for the benefit of the company, the shareholders, and the network. With all that said, I think one thing that's really important to highlight before getting too into the weeds is really the framework that we plan to manage these two verticals under. And we plan to follow in the footsteps of all of the other various public crypto companies that are coming online. We think that capital efficiency being at the forefront is something that really will help drive the company to new heights. And this means capital efficiency not only for the operation of our validators, but efficiency in the purchasing of our Ethereum, efficiency in the deployment, and all of this to generate really the most yield while providing the most shareholder value. You can kind of start to see how this flywheel really starts to spin and take shape, right? Because we can start with our infrastructure. That infrastructure will already have Ethereum running through it, and that Ethereum will be generating a yield. From there, after we prove out our infrastructure, we're able to go and raise additional capital to dedicate to these two verticals, and that just keeps spinning. So you can think of it as, using some examples, a company that has maybe $100 million of this Ethereum is able to generate a 3% yield. That naturally just becomes a $3 million of net income. And as that balance sheet scales, that $3 million of net income really can reach new heights. There's really no cap on how much that can go to. And so, when you think about the accumulation, right, we want to be as efficient as possible. We want to be like the gas station that's always on. If you are a perhaps real estate developer, we want to be the ones that have access to the most land. And so in accumulating the most Ethereum, it'll really help all aspects of our business. Specifically on the infrastructure services, I know I mentioned a few of them already. Primarily, the start will be operating validators. Validators, you can think of them as very similar to Bitcoin mining, except it's very asset light because all of it really is more technical. Instead of having these chips and big data houses, we can just really move a lot of these services on chain through our network and through partnering with the incumbents I mentioned earlier. The second part will be attestations. Attestations is incredibly important and ensures data integrity across all forms of digitally signed documents. So this can range anywhere from a simple legal contract to the smart contracts that power all the stable coins. And as a result, between these two services, we'll be able to generate anywhere between a 3 to 4% yield. And therefore, that's something that we're very excited about. This 3 to 4% positions us already ahead of really any of the ETFs that are looking to stake in the future, because we'll be able to stake 100% of our balance sheet versus, only say 50% on the ETFs. This yield is something that we'll continuously be looking to build on, right? I think one thing that's paramount for us is security. and really making sure that the assets are in qualified custody, making sure that all of the smart contracts have been audited, making sure that everything is up to par, both from a regulatory standpoint and from an internal company's operations standpoint. And so while we may start at 3%, we're continuously looking for ways to expand this, targeting anywhere between a 5 to 6% in the long term. The Treasury strategy, essentially how we go and accumulate as much of this token as possible. And here we will look to leverage the existing capital markets frameworks that have already been really strong for the entire digital assets industry the past year. We have this public vehicle, right? So we're able to go and raise really bespoke equity and debt financings, some things that are becoming more and more popular in the market as the market adopts these types of assets. And through those financings, we'll be working with the top partners in the industry to accumulate Ethereum at a favorable price, perhaps use some various structured instruments to get this average price down. And all the while making sure that we're fully regulatory compliant, full transparency with all the tokens and any actions that we take with those tokens, and making sure that we're in constant communications with all stakeholders that may have influence on how the network performs. For our treasury, we'll have various metrics as well, as just similar to how we'll have uptime and yield for the attestation and validator networks. For our treasury, our key metrics will be ETH per share ratio and ETH yield. Diving into these, ETH per share ratio really is just the measure of how much Ethereum is weighted per share of the company. And that's something that we hope to grow. And the way we would grow it is through increasing our ETH yield. ETH yield is a percentage that just measures the increase in Ethereum on our balance sheet from quarter over quarter, maybe year over year. So, when you look across the board, I think that there's a lot of different ways where people are trying to get exposure to digital assets and this entire ecosystem. The market is booming, and we really want to be at the forefront. And so we've really built together this structure that allows us to capture the most amount of value as possible while maintaining the security, while maintaining the transparency for all shareholders. And so, you happy to walk through some of these questions if you guys have on the chart, but very clearly, Republic Technologies is something that is self-managed by highly experienced folks. We have access to much more yield than traditional methods of getting exposure, and we'll be looking to grow that significantly as we scale and expand globally. And really quickly, want to touch on our milestones to date. So this whole transition to this new strategy really started in February. That's when we came and really pivoted the company. We took it from being just simply a medical technology company to one that is focused on chain with the Ethereum blockchain. So from then, we've really built out the team, got all of the most experienced folks from the industry involved. And then once that happened, we were able to actually acquire a substantial amount of Ethereum to seed our initial balance sheet. Since then, that Ethereum has been productive and generating revenue, which we will be happy to share on future financial reports. Now, I think I'll wrap it up there, Martin. Just very quickly, currently, if for anyone who's viewing live or online, we are listed on below exchanges. We look to expand globally, and we are always looking for new ways to really help the entire industry and always open for conversations.
Dan, thank you very much. Appreciate that. Maybe starting off on the big picture, the recent passing of the stablecoin legislation, for those people who aren't fully up to speed on exactly what that means and how that impacts Ethereum and then as well Republic, can you just go over that a little bit, how this impacts you and the implications?
Yeah, happy to. I believe you should be referring to the Genius Act, right?
Yes.
Yeah. I think the Genius Act really marks a turning point for crypto. It creates this regulatory clarity that previously was not there, especially in the previous administration, right? And so this is the clarity that really aligns US fiscal and monetary policy with digital assets. And so this really takes form in two main points. The first would be that the clarity around digital assets, right? And so this would refer to the actual tokens themselves, things like your BTC, your ETH, and other tokens. And previously, these institutions, your pension funds, your asset managers were really sidelined because there was no framework to go and even invest in these assets. Now they can. And as a result, we've seen an extreme amount of buying. You can see this in the rally of price over the last month, as well as the various applications that are being built. And secondly, for stablecoins specifically, right, it gave a lot of clarity. For example, they must be fully backed by cash or treasuries. They are not allowed to carry interest. And this way, this clarity is really, again, everything that helps drive innovation. This allows the banks to really be safeguarded with those proven reserves, and allows the innovators who are actually building the stablecoin products themselves to have this clarity. Perhaps if we had to break out interest from the coin itself, perhaps if we have to manage them in certain ways with certain reporting, all of this is ways to ensure that not only the institutions and infrastructure is safe, but all the users on top of the network are protected.
So what are you working on right now at Republic? What are your key goals? What are you trying to, let's say, accomplish over the next couple months, or heck, we're almost in September here, by the end of the year? What pieces do you need to get into place to start successfully executing and achieving your goals?
I think team's done a lot of work to date, and we really just continue pushing forward on everything that we've been doing. Just to give a few examples, right? We are working with validator providers who have over $10 billion of Ethereum running through their validators. These are established guys. And so once those are in place, we'll be able to have this very trustworthy infrastructure to not only run our Ethereum on our balance sheet through, but also be able to provide that validator and attestation service and open it up to clients, right? We already have a few clients who are testing with us now, and really hope to expand that and open it up to the general public as we move on. And the second part would be the continuous accumulation of this asset. And so, we want as much of it as possible. Like, a gas station cannot have no gas, right? So we need to go and continuously have this to power all of our infrastructure. And so we'll be continuously looking to acquire Ethereum in ways that are accretive to shareholders. I think that as we prove out our validator business, once we get some metrics there, it becomes an even more exciting story. And this all lends to us being able to be at the forefront, along with some of the top folks in the industry, like the BlackRocks, really driving this narrative.
So the business model is you're getting all these partnerships with key players in the industry, which is hard to do. You need the trust and the relationships. So are you going to be essentially acting, I don't know the term, like as a wholesaler, where smaller parties who don't have these relationships can kind of work through you to get connected to these various partners, and then you sort of clip a fee for doing that? Or exactly that part of the business model, how does that work?
Really, it's essentially that. I wouldn't call it more of call it wholesale, because we do believe in like the network itself. A lot of these things we don't really have, like, say, control the network. So anyone could perhaps use it themselves, but we do want to be, kind of that beacon of light for folks who maybe don't understand the technical nuances as much. They can come directly to us. We can help them set up any of the infrastructure themselves that they're looking to go and build on the network. And I think that's where our role sits. So while we will be, generating revenue, the 3% I mentioned earlier on all of our validator and attestation services, I think that it's not so much as it's not so much as our only business. I think the ecosystem and being players in the network is something that will not only help our business expand, but really help the entire ecosystem.
All right. And are you trying to create any, let's call it, industry specific solutions, or for, I don't know, the finance industry or healthcare industry, or distribution industry where you're trying to target specific industries to have sort of tuned solutions that ideally fit their kind of specific needs and requirements?
Yeah, we're definitely looking to do that. And, given we started as a medical technology company, we did
Yeah.
primarily focus on the medical sector in the early days.
Yeah.
And, that's been going well. I think every sector needs attestation services, right? Attestation sounds like a complex word, but it could be something as simple as signing a legal document. And so
Yeah.
that's something that we really began testing back in Q2 with our medical partners. We're looking to roll that out for other industries. And, I think you mentioned specific products for now. I think that'll be our product. And if we choose to expand with more Ethereum powered products, that's something, to be discussed in the future.
All right. So, and then there are two key parts of your business model: is the attestation and then the treasury model, the portion of your model. Key to that is like building up the balance sheet so it can be deployed. And you talked about different financing structures, equity. I know notably some big players out there is you preferred shares or convertible debt. Any thoughts on that? And I presume maybe you can't say too much right now, as I'm sure you're working very hard on that, but any hints or any sort of, how is that side of the business going, let's say?
Not able to share too much, but I do think that, all the options that you mentioned, we are open to. We'll be working with our financial advisors to make sure that whatever we do, we're smart about it. We want to make sure that any financing is accretive for shareholders. And, that's one promise that we will make. And apart from that, it's hard to give specifics on like when we may choose to use a convert or versus, straight up equity financing. I think a lot of that is market dependent. And, I would just say that we will be nimble and we will be actively looking for the best and most efficient ways to finance.
All right. And let's say through the end of the year or the next 6 or 12 months, what are some key, let's say, headlines or news releases? I'm not saying specifically when, but what are some key milestones or events that you would like to announce in the next short to near to mid-term?
I think when we get our validators fully up and running, we expect that, shortly. That should be a very exciting day for us. That's when we'll not only be able to start using our Ethereum, but we'll be able to begin opening up to some early beta testers from other participants to come and stake their Ethereum with us. And I believe, at least for call it the near term, that is really the biggest goal.
We've covered a lot here. Before we wrap it up, Daniel, any final thoughts or words or ideas that you want to leave investors with?
We did touch on a lot. I guess I would leave you guys with just the fact that really with this cycle, this administration, this cycle, these next 4 years, we believe we're extremely optimistic. We think that with things like the Genius Act, with Project Crypto that we didn't mention, but all of these different pushes from the regulatory front really allows everyone, including myself, including all the great builders out there, to go and get a lot more. They're able to move a lot faster, just because they're not really tied down by this lack of structure. And so I would say that starting with the Genius Act, starting with Project Crypto, we would expect more and more of these favorable regulations to come out. We're very bullish heading to the end of this year and for the next 4 years.
All right, Daniel, thank you very much. Appreciate the time. Looking forward to getting updates and seeing your milestones as you get to them. Have a great day. Talk to you again soon.
Yep. Thank you very much, Martin. Have a great day.